Hello friends, I'm Sachin Trivedi. Today we all live in uncertain times and pandemic like COVID-19 makes it all the more challenging. But we should all realize amid this uncertainty, there also lies an opportunity. We just need to broaden our horizon and look beyond current uncertain times. Today we're going to talk about UTI Transportation and Logistics Funds. In UTI Transportation and Logistics Funds, we have close to 81% exposure to auto OEM names and close to 14.5% exposure to logistics names. When we talk about performance of auto sector, especially BSE Auto Index, it was down 40, close to 40% in last 2 years and close to 22% in last 1 year. This is as of 31st of May 2020. Now, obviously, the poor volume performance by auto OEM has been one of the factors behind this poor performance. And this poor performance by the auto OEM on volume front has been, so if we talk about the volume performance of auto OEM, it has been the worst ever decline in last 4 decades. Now we all know the factor behind this poor performance is clearly slower income growth for people, as well as the cost increases for the end vehicle on account of certain emission norms as well as safety norms. At the same time, some of the lending institutions have also been tightening their norms, which is end of the day making all the more difficult for buyers to go and buy a vehicle. But when we look beyond current uncertain times, we realize that penetration of auto in India is very low, much below its potential, as well as when we compare it to some of the developed and developing countries, it is way, way below their current penetration level. At the same time, we should also realize that in last couple of years, we have seen clearly consumers are asking for more features, which is, and they are also upgrading their vehicles, which is clearly higher ASP opportunity for some of the auto names, which means that there is a higher growth potential for all these auto OEM as well as auto ancillary names. Especially when we talk about the portfolio as on 31st May 2020, in the fund, we have close to 57% exposure to auto OEM names and close to 24% exposure in auto ancillary names. Now, as far as auto OEMs are concerned, we have increased our exposure by close to 2.7% in last few months. And clearly, we're taking an advantage of fall in prices in some of these OEMs. As far as auto ancillaries are concerned, again, we have close to 24% exposure. We clearly remain overweight as far as this space is concerned. When we talk about logistics space, clearly we have close to 14.5% exposure in logistics names, which is marginally overweight as far as the portfolio is concerned. In this fund, we have cut our exposure in some of the aviation names. Clearly, we believe that events like COVID-19 would bring near-term uncertainty to some of these companies, as well as we have trimmed our exposure to some of the port-based companies. Just to sum up on this fund, today, if somebody is considering to invest in UTI Transportation and Logistics Funds, he has to look beyond current uncertain times and look at the longer term potential which remains. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.